tuning into this earnings conversation with Dr. Satyanarayana Chava of Laurus Labs. Based on last quarter's commentary, Q3 was going to be a standard quarter with pickup expected in Q4 and then a step up here in FY23. Have the metrics changed a bit more than anticipated, particularly in the performance of the ARV API space, which led to this slightly weaker than expected performance, even as the other segments have performed as per expectations? Let's put that question to Dr. Satyanarayana Chava. Dr. Chava, great having you. I hope all is safe, and as I learn you're recovering from COVID, hope everything is all right.
Absolutely. Thanks, Neeraj, for having this call. As you clearly articulated, our performance, as we indicated in Q3, is not going to be great. Primarily because of ARV APIs. We were able to gauge now why this is happening and how long this will happen. At least we can say clearly now the worst is over. And the second, when we analyzed the channel inventory at various places, initially, because of the COVID pandemic, the multilateral agencies purchased more than what is needed. Second, the clinics started dispensing 90s pack instead of 30s pack. That created some additional demand. Due to pandemic, the HIV patients were not taking medicines from the clinics as frequently as they do earlier, because of the logistics challenges, and they don't want to travel in the public transportation, go and pick up these medicines. So the demand went down and the purchase went up. And even assuming there is a less pickup because of all these challenges, it cannot continue more than 2-3 quarters. Initially, we thought it will be 2 quarters, but it went up to 3 quarters. But now we have a very clear visibility. It's not estimation, it is a visibility, clear visibility, because people are placing orders on us for APIs, for the immediate deliveries. So here what happens in the ARV APIs, nobody places an order without they have a tender award. So when they get tender, they place orders. So we have seen good order book for ARV APIs. That is the reason we are very clear and confident ARV API sales will pick up from Q4. And our ARV API sale in Q3 was the lowest in the last 12 quarters. And the rest of the businesses have done, in fact, better than what we anticipated.
Sure. And I will come to that, sir. But let me just go segment by segment because it will just make my job easier. You know your company inside out, I don't. So the ARV APIs, Dr. Chava, the last time as well, I'm glad you're saying that there is a bit of a visibility that you have, and it's not an estimate, because the last couple of times there has been this expectation that this will be the last of the pain, but it was not. Can you therefore say that both demand as well as pricing will most probably, or definitely as the case may be, show a recovery in Q4 itself? And could it be trending or could it be lumpy in nature because of the uncertainties around COVID-19?
ARV API business was never lumpy. See, the growth gradually goes down gradually. See, the business is not, the requirement is not going down. The market share moves from one company to another company. In the case of APIs, there are not many companies. If you look at it, there are only 3 companies who are selling APIs in India. And then there are 2 other companies. So when our customers get orders, we will supply APIs. So it is a gradual. So it's not lumpy.
Okay. There's also this conversation around how the raw material price impact on the API segment, unlike the last quarter, which was felt for maybe 30 to 45 days, which is in Q2. Q3, the full impact of raw material inflation also was seen. Can you throw some light here? How is that pie of the picture shaping up in the API segment in particular?
The companies who wanted to have the principal just-in-time inventory, they had problems. So if you look at some solvents, the price went up by 100% and then reduced to normal level in 3 months. So people who purchased those solvents in those months have a significant impact. And our ARV business is not where you can increase capacity in 2 weeks and reduce capacity in 2 weeks. So our inventory cycle from raw material ordering to producing API is 120 to 150 days. So we have a continuous inventory that helped us to overcome some of these solvent price increases. So we have seen impact, but our impact is not as big as what others felt.
Okay. So, Dr. Chava, can I actually, before I ask that question on the API segment, which is my last question there, a couple of other things. Slides number 29 and 30 in your presentation, you've given some insights into the injectables and the possible disruptions and why you believe it might not be as disruptive a pocket. Was there a need felt by you to express this in the presentation because there is a lot of questioning around whether the business model faces an existential or a business threat, so to say? And can you elaborate a bit on this?
The reason why this time we wanted to summarize ARV landscape so that our investors will understand the nuances of this business. This business will continue, and there are no visible threats right now. So injectables, if you look at economically, today a treatment cost is around $5 per month. So if there is a depot injection has to be given, the cost of manufacturing, cold storage, and a person has to come to clinic to get his dose administered, will cost more than $5. And will it be better? No. Efficacy is same. Cost, see, in emerging markets, cost is king. Whereas in the markets other than emerging low and middle income countries, sometimes convenience is also equally important. But in African context, with challenges to manage cold chain logistics and these depot injections, we don't see that will capture market share in the LMIC regions. So we wanted to give what we understand about this market. See, it's not that these are our views. These are the views we captured from various reports we go through, and concise report was put so that people will also understand where are we and why we are saying this business is sustainable. Let's not look at quarter by quarter.
Got it, sir. So my final question on this piece is, from an investor's perspective, the investor has seen that when she looks at your numbers over the last 3 or 4 quarters, she's seeing how, presumably because of the ARV API business sloping downwards, it's impacting your return ratios, it's impacting your overall revenues and margins as well, which, while you had said with centered at around 30% console, this quarter have come down to 27-28%, if I'm not wrong. So you seem to be replying back to the investor that as things stand, as per your best estimates or the visibility that you have, this is from where things turn for the ARV API segment.
Actually, this quarter we demonstrated, despite of less ARV API sale, we were able to give good numbers. See,
yeah.
Look at we gave 28% EBITDA, and we are saying for the financial full year, we are very confident we will be at 30%. And is 30% EBITDA is a bad number? Definitely is a good number. And 25% ROCE is a bad number, is a good number. See, we have to give some gestation for every new opportunities. Gestation time is required for any new initiatives. As we were speaking earlier, by 2025, we will see a new Laurus.
Sure.
So our ARV, see, if you look at the last 2-3 years, people were talking, what is FR and sale? What will happen FR and sale? Now we are not talking FR and sale. By 2025, we have strategy in place. We have products development in place. We have our infrastructure which is going to be in place, where our ARV revenues, both APIs and formulations put together, will be less than 1/3.
Sure.
It used to be 90% revenue. The quantum of ARV revenues will never go down. Quantum of revenues will still be at the similar level, but the other businesses will take ARV from 90% of our revenue to less than 1/3 of our revenue. See, we have taken steps, we have put actions in place, we have a well written down strategy, and we're implementing it.
Sure. No, Dr. Chava, that's the long term, and I think that is well in place. Now, only conversation was, can the short term get disrupted enough to cause near-term gyrations in the overall long-standing outlook that you presented, and which is why my question, that if this disruption is over and you have the visibility there, then investors would have a view or can kind of put out a hypothesis about what Q4 and what the next couple of quarters could be. You don't have to do that, but as investors, I'm sure they have to do that. Look at Q4, look at Q1, look at Q2 for their investing landscape picture of yours. That's why I was asking. You reckon Q4 could see a bit of a turnaround in ARV APIs as well?
Absolutely.
Okay. And then I'm coming to the other businesses, of course. So this was part one, and I'm glad we've spoken at length about APIs. I'll take a few more minutes, Dr. Chava, talk about some other segments as well. So right here, formulations. They had a nice ring to them in Q2, just maybe marginally tapered off a little bit in Q3 compared to the strong performance in Q2. And you mentioned that in the presentation as well. Give us some color on how Q3 was for the formulations business.
Formulations business we have done, in our opinion, well. We didn't get a couple of approvals what we anticipated. That's the reason Q3 was less. We are hopeful to get those approvals this quarter. And our new capacity expansion also is coming very handy when we need capacity. So in formulations, we will do very good. We will do very good. Yeah.
Okay. A bit about the molnupiravir opportunity, Dr. Chava.
Molnupiravir, we don't see it's a big opportunity for us.
Okay.
The reason, there are many approvals, and ICMR didn't put this in the guidelines, although DCG gave approval. And in the other markets, the Pfizer Paxlovid, people prefer to take Paxlovid versus molnupiravir. So there is an upwave, our partner is selling, and it is not big. It's not big. It's not meaningful.
Okay, not meaningful. What promises to be meaningful are the next two, and just a couple of thoughts on those as well before I come to the console picture of Chava. CDMO, strong performance yet again, it continues. Do you reckon, again, trying to figure out if there is visibility. Dr. Chava, the reason I keep on talking about the visibility is when I talk to a lot of large companies in other sectors. I was talking to Pidilite, and they spoke about how it's nearly impossible to even talk a quarter out. Asian Paints had the same thing to it. So I'm trying to understand how easy or difficult it is even for you to talk about the near term or the medium term visibility. And that's what I'm asking. CDMO, exceptional performance yet again. Do you reckon this trend continues, or is it difficult to predict that right now?
We believe in CDMO, we're at the very infancy stage. We are not big. See, despite we are doing this quarter 200 crores, we are seeing we are very, very small in CDMO space. So our opportunities CDMO are enormous. So we are investing in CDMO significantly, and we are investing not in infrastructure but also in the manpower. We see this is a great opportunity for the company, and we have added new clients, we have added new projects, looking very bright.
So I kind of saw those mentions in the release. I'm safe to assume, and I don't know if you want to spell it out, but safe to assume that the curve of growth that we've seen thus far, you reckon it will continue to the quarters ahead?
We do believe so.
Would believe so. Okay. Last segmental question before I come to overall and Laurus Bio. Now, Dr. Chava, based on our conversation last quarter, I was of the assumption that because H2 would anyways be better than H1, you have more capacities in place, that Q3 itself will start showing that growth bump up over Q2. It hasn't quite done that, so to say, if you will, in the same vein. And please correct me if I'm wrong. Do you reckon Q4 shows that quantum bit in Laurus Bio? It's a very small segment, but I'm just trying to understand.
Q3, only by end of Q3, they were able to put all the 4 fermenters into operation. So there were some delays in qualification of those fermenters. See, if you look at in the biospace, everybody was busy with orders. So they were unable to implement the projects on time. There was delays in qualification of the fermenters. Now it is done. We see Q4 will be meaningful, and we are not only talking about 4 new fermenters. I think eventually that 4 fermenters of 45,000 liters each will be their pilot plant. It's not commercial. We have taken land, 30 acres land. We are trying to debottleneck the 4 fermenters, add more downstream so that we can run the fermenters more effectively. That division will be very meaningful when we have a 1 million liter fermentation capacity, and we add a 1 million liter per year fermentation capacity. That is the scale we are envisaging for the division. This 180,000 liters is not even a pilot plant, and eventually this will be a kind of a killer app for them.
Right. So then 3 questions, console, one on Q4, one on the capacities and one on the margins before I ask a couple of other niche questions. Last quarter, Dr. Chava, you had mentioned that, and you had categorically laid it out, so people shouldn't have the complaint. I'm just trying to understand that after a normalized Q3, which wasn't normal, but that's okay, you will see Q4 of FY22 being almost equal to Q4 of FY21 before the step-up year begins. You reckon things are on track for a normal Q4, or is it difficult to say that?
No, we hope it will be very normal Q4. Back on track. Yeah, back on our trajectory. Yeah.
Back on track. Okay, that is part 1. Part 2, you had mentioned that FY23 would be the step-up year, which enables you to reach that $1 billion mark. Now, there have been some disruptions because of COVID, both in production facility managements, I presume, as well as supply chain issues too. You reckon, as things stand, that you are looking forward to capacity expansions commissioning or getting completed and capacities commissioning starting FY23? And does that still keep you in the race for reaching the $1 billion mark, despite the first 3 quarters of FY22 not being quite up there?
See, our capital expansion, both in APIs and formulations, was not based on how we perform in each quarter. So we have inaugurated one API block in November, and we are putting into use another API block next month, and another API block in April. So these 3 API manufacturing blocks will add 25% additional capacity than what we had so far in the company. So our API expansions are on track. So it is not impacted by COVID pandemic, thanks to our colleagues, their planning, their ability to talk to vendors and do projects on time. So we have added, I'm saying I'm doing, by end of February, we can say we have added 25% new API capacity. By April, we can say we have added 50% more capacity in formulations. By June this year, we can add another 50% more capacity. So by June this year, we will double our formulation capacity. So none of our capital plans were impacted. There were some delays, but there's no impact, which will delay our aspirational target of $1 billion in sales for FY. We do believe we will on track to achieve that.
Okay. These are uncertain times, so it's okay if there is a miss as well, Dr. Chava. Best of the companies are doing that, so no shame there. But okay. And part 3 of my question on this front, maybe it's a bit of a repeat of last quarter, but you do reckon that on an annualized basis, accounting for all the disruptions that happen quarter on quarter, you can still be around that 30% EBITDA margin mark on an annualized basis, if not in FY22, then at least in FY23, when things hopefully will be a bit more normal.
No, in FY23, we did, I think we are very still hopeful of full year 30% EBITDA number. Yeah.
Are you saying that for FY22 or FY23?
22.
FY22. Okay. Fair call. Dr. Chava, a couple of other questions before we wrap up, or 2 or 3 questions. Please give me that time. You had mentioned about some approvals pending from US and Europe, which will help supplies and top line growth. Have they happened? Sorry, I missed it in the presentation.
One we are expecting next month, so it is on track. So we don't see any challenge. The other one, it was delayed, not because of our facility, some other challenges. So we are expecting that by April. So I think the FY23 will be again year where all of us are looking for will be a quantum leap.
Yeah, sure. Something that you referred to last quarter as well. So the commentary consistent there. You bought a significant minority stake, I think 26.62% in the cell and gene therapy startup. Can you talk a bit about this?
So it was very challenging for people to digest. And ARV, see, still many people reckon Laurus Labs as ARV API. They run up the mill APIs they do make. So, but we use a lot of technology, a lot of innovation in anything we do. So we are a research-driven manufacturing company. We always look at what can we do. So our rich core acquisition, which we renamed Laurus Bio, is also we acquired a 100-member team and their pilot plant. We didn't acquire business. So they're doing 30 crore last year. We didn't acquire their business. We acquired the team. When we're looking at what can we do, we don't have the ability to innovate in every sphere of the life science. So we decided to invest about 10% of our profits in disruptive technologies, internally or externally. So when we came across this IIT startup, we thought this is a great idea for us to jump into the first, it's not a venture capital, but to venture into disruptive technologies. So we take 10% of our PAT every year and invest in disruptive technologies. We're not harming the company, but we're only enhancing the visibility of the company. Why? We also invested personally to the company to give more value to our conviction. So people are saying this is the company money, so these guys invested recklessly. So people may think so. But then we want to put our skin in the game because we believe in so. So senior management invested about 8% into the company.
Okay. Okay. And you reckon that you would probably continue doing this string of pearls, disruptive investments, because much like a PE player does it, if 2 out of the 10 or 3 out of the 10 click, then they could actually help in quantum jumps in your business over a period of the next 10 years.
What we're also planning to do, we don't want to invest in unknown sectors. We want to invest in drug discovery. We want to invest in small molecule, some large molecule startups. So we'll continue to invest in those. Yeah. Now, that was the beginning, and now we're very clear to invest 10% of our profits. We invest in these kind of startups.
Got it, sir. I have last 2 questions. The final one is on an HR policy, which I heard in an interview that you gave to Money Life when you were nominated for corporate governance. But before I come to that, I have one business question, one last question, Dr. Chava. What are the risks to this optimistically confident growth path that you have for the near term, for the next 5 quarters? I can't go out 5 years out. Hopefully we'll get there at some point of time as well. But for now, if I focus on the next 5 quarters, you've painting a strong, confident picture, and God willing, I hope you reach there and excel there. What are the risks to this?
There are two risks generally. One is EHS risk, environmental health and safety risk, and the regulatory risk. So regulators coming and saying some negative things about the practices. These are the two risks. See, if you look at our EHS, we have done exceedingly well in EHS. In the last 6 years, our facilities were adjudicated as the silver and gold medals by the Government of India. We got 4 awards. And regulatory wise, we have very good track record. So keeping those risks, we always work on those, mitigating those. There is no capital risk. We have enough capital. There is no capacity risk. We have put enough capacity. There is no customer risk. So we are working with the top customers. Our customers are not. So there is no vendor risk. We have diversified vendor base. And we have teams in place. So internally, we don't see any challenge. But external, we don't have a control on what external things will disrupt. EHS, we continuously work on those. And then safety-wise, we do very well. Regulatory-wise, we have very good track record. So I think we're doing good, thanks to our team.
Got it. And final question, Dr. Chava. In this interview, you referred to how Laurus is this culmination of efforts of the whole team. And you kind of laid emphasis on that and the kind of practices that you put in place. So very impressive. I was very impressed with that. Before we wrap up, that one human resource action that you took in the last 3 months, which you're very proud of, because you would have taken a bunch of those. We don't have time to discuss all of those. But one thing that stood out for you, I'm particularly wanting to bring this to the notice of people simply because of the excerpts or the takeaways that I had from that long Money Life interview.
I think if you ask me what we have done in the last 3 months, we continue to think of family well-being rather than employee well-being. So we work and think how we can keep employees and their families happy. So when even during the COVID pandemic, we extended the same help to the family members like we extended help to the. See, even today, every day morning, we get how many infections, how many people recovered from the COVID. We include even family members. So we monitor how our employees and family members are doing. And we talk to each of those. Our HR talks to each of those family members who are in need of any help.
Okay. Well, keep up that practice, Dr. Chava, and a bunch of India members are doing that, which is so heartening that corporate India stepped up really well during these trying times, and that was really heartening to know. But thank you so much for talking to us at length today, and all the best for the quarter ahead. Have a great year.
Thanks, Laurus. Thanks for your insightful questions.
No, lovely having you, sir. And viewers, thanks for tuning in.
Thank you. Bye-bye.